How's it going, everyone, and welcome back to another video. Now today we're going to be going back to the bread and butter of structure. I've done loads of videos before on this, but I'm going to do a more updated one, but people really liked them in the past, so I thought I'd do them again for you today. So let's jump on the charts, and I'm going to run through exactly my process that I use when I determine where price is going. And it doesn't take long, which is the main thing. You don't want to spend half an hour trying to figure out bias. So this is a really quick, easy way. So hopefully you find it useful yourself. So let's get onto the charts. Okay, so as you can see, we are on GU currently. Now obviously price recently has been a little bit more tricky with everything that's going on in the world. But that being said, it's still possible. So what we're going to do is go through exactly how to identify bias using structure, and then that way it will make it far easier in the future for you guys when you're trading yourself and wanting to find bias in the markets. So we'll go through a bunch of pairs and I can kind of show you how I do it. So say I came to the charts here at this time today, looking at GU for example. First of all, you want to make sure you use one time frame. Now, one time frame is important because if you're switching around time frames, you're going to have very different bias. Sometimes they'll align, and that's something people will use. But if you're moving around time frames, that's going to really confuse you. When trying to determine what the overall trend will be. Normally the way I'd see it is whatever time frame you're going to be executing on, so that could be the 5 minute, the 15 minute, the 30 minute, use that as your kind of bias. It just makes it far easier. So for me it's the 15 minute, but whatever your strategy is, you can just use that time frame. So once you've chosen your time frame, you then want to just look at the most recent highs and lows and watch that. So for example, if I was coming to the market when, let me zoom in a bit so you can see a bit clearer. If I was coming in and looking at the market like this and say price was here, what I would be looking at is this high and this low using the bodies. You don't want to use the wicks. The reason being with wicks is that's just showing where price has been in that candle time frame period. So for me, every 15 minutes is a 15-minute candle. So that's just showing, the wicks just showing that price has gone to that point within the 15 minutes, but not necessarily where price closed. And you always want to use where price is closed because that's the solid data that you're using to sort of trade off. So make sure to use the bodies, not the wicks, when looking at highs and lows, which is why I've done that like this. And basically what I would see here is we're obviously trending downwards. As you can see, that's pretty obvious. But then when we have some actual structure with highs and lows, you can see that we've just broken to the downside now. And so for me, that would be an obvious quick time sell. Now you don't want to be looking to sell in a couple hours or like on a higher time frame, which is why I stick on one time frame, because this isn't a very clear solid break. As you can see, prices wick down and then come back up and closed just below, so it's not the strongest break, but it is a break. So that's something you want to make sure of. Now another thing I want to sort of clarify, and something I struggled with, is when you're choosing a high or a low, you don't want to overthink it. So it's very easy to look at multiple highs, multiple lows, and determine that as bias. This is why I say to you, you want to stick on one time frame and you want to choose the most recent high and low, because it just reduces any human error, reduces any risk of you misreading it, because it's just what's happened right there, right now. And it's clear. Okay, so that's another thing I want to reinforce, is only use recent high and lows, and make sure that it's on the same time frame that you're trading off. So this would be what I'd be looking at, for example, say on GU, if I was going to be trading at that time. Now obviously that isn't the case for me, and this isn't 100%. Obviously this won't work all the time, and also the higher the time frame, the stronger the bias. So if you're a swing trader and you're looking at the 4 hour on GU, you know, if it breaks this low, chances are it's going to keep selling because it's on that higher time frame overall shift of the market. So if I go back to the 15, this one's kind of similar. There hasn't really been much. Same with gold, but it kind of speaks for itself. But if we go to like, I don't know, Euro, GBP maybe. So again, you can kind of just see it here. With what the market's been doing today is, if you take the most recent high and low and you're looking at price when it's here, and it's broken below, chances are it's going to continue selling, which it did. So that's kind of what you'd want to do. Now obviously coming to the market here, this is what I'd be looking at. Is obviously you've got this low here and you've got this high here, using the bodies again, as I said, and you want to be basically watching what price does, whether it breaks out of this, or if it, you know, comes up. And again, you want to wait for the candle to close. Do not use the wicks. That is really, really important. So let's go to another example, just so we can keep, you know, reinforcing what to look for. So again, you want to take the most recent high and low. Now, this is where it can be selective. Everyone's going to have ideas of, you know, highs and lows that are valid for them. Now this will just come with time and with back testing as to what high and low is going to be best for you. But if we take this example, some people might say this is a high, this is a low. For me, I'm not really seeing that. For me, I'm taking the most recent high and low that actually matters, and this is kind of the clear major structure here. So for me, UJ would be consolidating right now, which is, you know, understandable. We're going into the back end of New York, coming into that Asia session, so that's where most of the volume will pick up for UJ, as you can kind of, you know, see. So what I would be looking for is waiting for either a break of this area or a break of this area, and that's the key thing I want you to take away. You want it to break the most recent high or low that's valid to you and your strategy, and you want it on the same time frame as what you're entering off, because that way it just removes all confusion, and you could go to any chart and basically see if it's going to be a buy or a sell in that current moment. As I said, if you're you know, looking to hold a position for multiple days on a lower time frame, for example, I would not recommend this, because this is very quick in and out spot trading as opposed to longer term swings. So I'd be waiting for one of these to break out. Now this is a great example as to why you don't want to use you know, wicks as breaks, and you want to wait for it to close, because if you view this as the low and this wick came down and actually broke below the low, to you that's going to be a break of structure, and you know, you would probably be in drawdown right now. So that's why you want to wait for the body to close below the area. So again, if we go to like a different pair, might be slightly, you know, similar, but again, very downtrend oriented at the moment, just because of, you know, everything that's going on in the market. But this doesn't just work across FX. This will work, you know, across any pair. And you have to obviously be careful of change of structure, sort of character change. Because for example, like with Ethereum, you might see it prints a high that breaks below both lows, and now it's pushed up and broken the high, so it could potentially be reversing. But it's the exact same process with reversals, just using this simple blueprint of structure, which is same time frame, most recent high and low. Do that, wait for one of those highs or lows to break, and that will give you your bias for the day or for whatever, you know, period of time you want to trade for. So again, if we just carry on looking at different pairs, Aussie dollar, I mean, they're all kind of doing the same thing, where you'd be you know, doing yourself a disservice if you were going long. You only really want to be shorting in these markets, just with how it is. But again, right now, what am I looking at? Well, what's price done recently? We got this high, we got this low, and we also have this high here, like this. And as you can see, what's happened is broken out the recent high, so I can, expect it to continue long, retrace deep and then carry on long. That's, what you would expect to see, just given the fact that this was the most recent high, this was the most recent low. We broke and closed above it, retrace, continue in the upwards direction, and that way it makes it far easier to trade, because now all you need is some form of entry model within this leg to go long, and then that's basically your strategy. You can come to a chart like this, instantly get your bias, and then just have an entry model, and then that's going to be sorted for you. You're not going to need to do anything else in terms of markup strategy. It just makes it really, really easy. We've done Euro JPY. Let's go to like, don't know, same again. If we're looking here, most recent high, most recent low, waiting for one of these to break, either way, and then you can get in on this retracement, or you can get in on this retracement to go short like that. And that's literally it. It's following the trend. You're not doing any counter trend, unless obviously you do break the high in the downtrend, and vice versa for going short in an uptrend. But it is basically that simple. It gets a bit harder when you have sort of, things like this. So like for me, if I was coming to the charts to trade, there would be no trade for me. I don't really see anywhere where I could go long in this. Realistically, you're gonna want to go long when you have something like this, because you'd have to essentially wait for it to make the high, make the low, come up, break again, and then you can look to go short further, because it's then printed a high, printed a low, market's here, you're waiting for it to break one of these, it then breaks, and then you can get in on a retracement to continue it lower. So that's the good thing about it. So for example, today on GU with me and my trading, if we just clear this so it's a bit easier to see, when I came to the charts in the morning at 8, which was here, London Open, I saw all this PA, and I'm waiting for a break of, the sort of previous session high and low, and there isn't really a solid high or low from that session. So for me, I knew there was going to be no trade today, and it's great because you can then go about your day and just carry on like normal, instead of having to waste your time sitting there, on different time frames. Now obviously it's going to vary. If you're on the 4 hour, then where's the 8 o'clock candle? It would have been, somewhere here, but it, structure's a bit clearer on the higher time frame at the moment. But this might, set up some nice structure going into the next London session. You might have maybe some consolidation now between these two most recent highs and lows overnight in Asia, and then you get either a break to the upside of the most recent Asia high or low, or you get obviously a break to the downside, and then you can look to take it short or long. And that's literally how I, get bias and decide what way I want to trade in the morning. So hopefully that kind of clears up what you want to know. If you have any questions around structure, how I do it, what makes a good high low, leave it in the comments, or you can ask me on Instagram, or if you want to know everything about my strategy, you can check out my Telegram below to sort of find out a bit more about how I trade with breakdowns and things like that. But regardless, I hope you enjoyed this video, and I will see you tomorrow for the next video.